Stuart Milne, the CEO of HSBC India, and began by asking him what could be done to tackle the NPA problem. Here's a look at his thoughts.
There's many ways to skin a cat, and creating a bad bank is one possible solution. The advantage of that solution is that you take out the assets from the sort of business as usual banking system, and you hire a specialized team to manage that, and that can be a very effective way of doing it. I think that the NPA problem is not simply a recapitalization exercise. It's not just taking out the bad debts and replacing it with more capital effectively. It's also about skill sets, it's about governance within the banks, it's about efficiency, it's about overlapping banking networks that need to actually consolidate, reduce costs generally, not just NPA costs, but also costs within the banking system. And I think this is particularly important because over the next 5 years or 10 years, we are going to see massive digitization impacting the banking system. The banking system is going to have to get much more efficient.
You know, at the moment, to come to the absolute near term, bankers are stymied by the fact that every time they give a loan haircut, it could be described as cronyism, especially after the Kingfisher episode. Therefore, you know, there is an oversight committee which the IBA has, but that handles only some kinds of cases. Is there anything in the near term? The Deputy Governor has spoken of asking rating agencies to rate revamped debt structure. What do you think is the fastest way? Because I think we've already lost enough time.
I think the fastest way actually would be to transfer the bad assets into one agency that could then be accountable with very strict targets for disinvesting from those assets and making sure they get recycled. I think if we just carry on as we are, we're likely to have the same result, which is an insufficiently quick recycling of capital there. But that has to happen in concert with recapitalization of the banks. In a sense, the banks are facing a perfect storm right now, because first of all, we had the problem of NPAs, which is a really big problem. As you said, more like 15% of assets are problem assets. But then you've also got no loan growth happening in the economy. So loan growth is at a 40-year low. In fact, we say a 40-year low only because records started 40 years ago. You know, loan growth is now below 5% in the economy, which is an extraordinary fact. And when you look at where that growth is coming from, actually the retail credit is growing at about 12–13%, and industrial credit is actually going down. So companies are repaying debt, they're not borrowing more. So when you have a banking system where there's no growth in lending, and at the same time you have this enormous NPA problem to resolve, you've got this capital squeeze. And it's really important the government steps in with decisive action now to fix this problem.
You may be speaking, I mean, you have seen other milieus, and perhaps you'll be able to enlighten us about how we can use special situation funds to buy up distressed assets. What's blocking the entry in India?
I think what's blocking it is this reluctance on the part of the banks, or perhaps the inability on the part of the banks to actually sell assets at the discount that's required to clear the market. You know, the way this works is that there is a negotiation, a discussion, an auction between two parties. There has to be a willing seller and there has to be a willing buyer. And you sit down and you have an auction. But at the end of the day, the seller has to be willing to dispose of the assets at the market price. And what we're seeing right now is a reluctance to do that because the capital implications are quite significant. There'll be losses taken, those come to book, and they make the capital position more difficult for the banks.
Well, assuming that you know, the suggestion of bad bank is taken, or let me put it this way, probably the bad bank suggestion, it's been on the table for what, the last 18 months or even earlier. It's probably not being taken because the government also doesn't want to see itself as taking the haircuts, because that will mean they are indulging in cronyism.
Yes.
Is that, if that is the roadblock, then you know, what's the answer?
Well, I think that's a fair point, that the government, when the assets transfer from Bank A to the central fund, they have to transfer at a market price. That's very clear.
Okay.
Otherwise, you have effectively, banks being held, not being held accountable for the fact that they've made poor lending judgments.